Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PU Accountancy online classes. In the previous class I told you Mahendra and Surendra, that is adjustment of capitals, page number 43, problem number 14, 1-4. Page number 43, problem number 14. I will read out the problem and let us analyze. Mahendra and Surendra are equal partners in a firm. Their balance sheet as on 31st March 2017 stood as follows. Liabilities side, creditors, bank loan. Bank loan is a normal liability like creditors it is. Capitals, Mahendra and Surendra. Balances given, that is a starting point by balance brought down in capital account on the credit side. Then on asset side it is stock is given. See, assets are jumbled without following that is a liquidity order rule. So you must, while writing there is a new balance sheet, while redrafting the new balance sheet, you have to make sure that you will write in the liquidity order. Remember these rules. Don't write like it is there in the problem like this, so I wrote. Don't do that, because the student should know how to write a balance sheet. So that is the main concept. Sometimes intentionally they will jumble the assets and assets. So you should follow the rule. Stock 39,000. Debtors, there is a provision, land and buildings, machinery, motor car, cash at bank. If you write it in the liquidity order, which should come first? Cash at bank. There is no cash in hand. So all bank entries, no cash entries here. Then comes stock, then debtors. Then you can write motor car, it's movable, machinery, then land and buildings at the end, remember. On 1/4/2017, Chandra is admitted into partnership for 1/6 year in future profits. Chandra brings rupees 26,000 as capital. Goodwill of the firm is valued at rupees 14,000 and it is to be retained in the business. So this is third method again, whatever we have solved here. So what we have to do is, we have to credit goodwill to old partners' capital accounts in their old ratio. That is, goodwill accounted to old partners' capital account. And goodwill will appear in the balance sheet, new balance sheet, remember. Motor car and machinery have to be depreciated by 20% and rupees 3,800 respectively. That means, motor car is to be depreciated by 20%. No doubt is a loss, decrease in the value of asset, debit side of revaluation account, and in the balance sheet on the asset side, motor car, inner column, less depreciation at the rate of 20%, deduct and write in the outer column. Very simple, right? Then they told 3,800 should be deducted from machinery. Machinery depreciation amount is given, not percentage, 3,800. Same thing. On the debit side of revaluation account, to machinery, depreciation 3,800, and in the new balance sheet on the asset side, machinery, inner column, less depreciation, deduct and write the net amount. Prepaid rent. When it is paid, it is an expense. Rent can either be an expense or an income. If the business concern provides the premises, some part is free, so that is let out on rental basis, then it is an income to the business. In that case, rent received, isn't it? When we hire someone else's building to do our business, then it will be rent paid. Rent is an expense in that case, remember. So rent can either be an expense or an income. Here it is prepaid rent. Expenses paid in advance, meaning is expenses paid in advance, rent paid in advance, which is not due. We need not have to pay, but we paid in advance. Maybe of the next month rent is paid in advance this month itself. So here it is income to the business, because if the rent wouldn't have been paid, the balance, cash balance could be more, isn't it? Cash balance would have been more. So what we have to do is we have to enter it on the credit side of revaluation account and should be shown as an asset in the balance sheet. Prepaid rent on the asset side of the balance sheet as an asset. Then provision for doubtful debts to be maintained at 10%. Provision for doubtful debts. So 10% on debtors, they told that whenever we create, we have to create it on the gross debtors 32,000. 10% means it comes to 3,200. That they told the new provision, total provision should be 10% on debtors, that is 3,200. How much is already there in the balance sheet? 1,000. What is the difference? 2,200. That is the additional provision we have to create. So when we create additional provision, that should be debited to revaluation account, should be entered on the debit side of revaluation account, and in the new balance sheet we have to deduct straight away 10%, that is 3,200. Then we will get the net debtors. That is what we have to do here. The capital accounts of all the partners are to be adjusted in their new profit sharing ratio of 3:2:1 based on Chandra's capital. Adjustments are to be made in cash. So you have to prepare a working note, friends. What you have to do is, based on Chandra's capital, you have to decide what is the total capital of the firm and how much capital should be there of each partner as per their new profit sharing ratio. That should be calculated and that should be carried down first. That should be carried down and brought down first. Then whatever the difference is to bank or by bank, if it is by bank, if there is shortage on the credit side, then by bank deficit brought in. The partner has to make good the amount which is shortage. If it is to bank, that means excess amount paid. There is an excess balance in the capital account of the partner which is returned to him. That is partner's capital account debtor to bank account. When the partner brings in bank account debtor to partner's capital. Remember this simple entry. Whenever the new partner brings in capital, bank account debtor to new partner's capital account or bank account debtor to concerned partner's capital account. Correct. Any partner for that matter. So very simple it is. When you pay amount to the partner's capital account debtor to bank account. Bank amount goes out, it will be paid to the partner. So on the debit side we have to make entry. That's a very simple formula. Remember. So that's what we have to do. Let us prepare revaluation account first. Revaluation account. I'll solve here. Revaluation account. Revaluation account. Write the column headings. Don't forget to write column headings. Debit credit, it is an account, so there must be debit credit. Particulars, amount in rupees, particulars, amount in rupees. Write it. Let me start. To motor car depreciation, motor car account, depreciation. Depreciation, that is how much? 10%. Show the calculations. 8,000 into 10%. 10%. Sorry, 20% it is. It is not 10%, it is 20%. So 1,600. 1,600. Yes, it is 20%. Then there is one more depreciation on machinery. Amount is given straight away. No need to calculate to machinery account. Again depreciation. Depreciation, how much it is? 3,800. 3,800. 3,800. Yes, it is. Then, provision for doubtful debts to be kept at 10% on debtors. So, provision for doubtful debts. For doubtful debts. Provision for doubtful debts account. How much? 10% on debtors. Show calculations here. 32,000 into 10% minus already existing PDD 1,000, right? Yes, it is. So, 3,200 minus 1,000, it will be 2,200. 2,200. 3,200 minus 1,000, 2,200. That's all on the debit side. On the credit side, there is an item that is prepaid rent. I already told you, expenses paid in advance. Shouldn't have been paid. We paid it in advance, right? So, how much it is prepaid rent? 600. 600. That's all. Know the entry on the credit side. Find out the difference. Transfer it to old partners capital account in their old profit sharing ratio. So, how much it is? Which side is greater now? Debit side is greater. That means there is a loss. Credit side total is lesser than the debit side total. That means expenses are more than the income. So, there is a loss. So, take the total of debit side first, higher side first. How much? It is 7,600. 7,600. Write the same total on the other side. 7,600. What is the difference? 7,000 is the difference. Distribute it among the partners. Old partners, old partners by old partners capital account. By old partners capital account. Capital accounts. Colon. Who are the old partners? Refer. That is Mahendra and Surendra. Mahendra, Surendra. That is 7,000 into 10 by, sorry, not 10 by, this was their ratio. They are equal partners, right? So, 1 by 2, 1 by 2. 1 by 2, 1 by 2. So, 7,000 into 1 by 2 is equal to 3,500. Is equal to 3,500 each. That's all. Right below that, loss on revaluation. Loss on revaluation. Balancing figure. Balancing figure. That's all. So, we have suffered a loss of rupees 7,000 distributed among the old partners only in their old profit sharing ratio of 1 by 2 and 1 by 2. Here, new ratio is given. Old ratios are also given. We can easily calculate what? Sacrifice ratio. But whether it is required for us? No. Sacrifice ratio is required only under premium method, first and second method. Now we are following third method. If such problems are given and partner brings in cash towards goodwill, first or second method, then we need to calculate sacrifice ratio, because the amount brought in by the new partner should be distributed among the old partners in their sacrifice ratio. So make sure of it. When new ratios are given in the problem, you have to calculate sacrifice ratio under first and second method, but here it is not required for us. So no need to calculate. Forget about it. Now, next step, we will prepare combined capital accounts of partners, right? Yes, now let us move on to the next step, that is the preparation of combined capital accounts. I already drafted the columns, so draw the columns. Combined capital accounts of partners, particulars, Mahendra, Surendra and Chandra in rupees. On either side, write debit and credit, very important. Do it fast. Yes, let us start with the opening balance. Refer problem. Capitals that is Mahendra, Surendra given 80 and 40. So by balance brought down 80,000 and 40,000. 80,000 and 40,000. 40,000. Then next one is you have to pass entry for, that is a capital brought in by the partner, new partner. So bank account debtor to new partner's capital account, bank account debtor to new partner's capital account. So by bank, new partner's capital account is credited by bank account, capital introduced. Capital introduced. How much it is? Capital introduced is 26,000. 26,000. Then what next? Then whether there is a profit on revaluation of assets and liabilities? No, there was loss, correct. So enter it on the debit side. Journal entry was old partner's capital account debtor to revaluation account, right? So old partner's capital account debtor to revaluation account. Loss on revaluation. How much it was? That was 3,500 each. Equal partners, right? 3,500 each. Enter it in their columns. No loss to be borne by the new partner. Then goodwill, isn't it? So goodwill, we have to create goodwill to the extent of how much? 14,000 should be retained in the business. So goodwill account debtor to old partner's capital account. So old partner's capital account is credited by goodwill account. By goodwill account created. That is old ratio. How much? 1:1. So 14,000 goodwill, right? So 7,000 each should be credited to old partners. 7,000 to Mahendra and 7,000 to Surendra. Then next entry. Are there any other entries to be made? No. That's all. No other entries. Now, what we have to do is all the entries are made. 3 entries on the credit side, 1, 2 and 3. Then 1 entry on the debit side. Yes, it is. Now, what we have to do is we have to decide how much should be the capital of each partner in the new firm. Very clear instruction is given in the problem. Capital accounts of all the partners are to be adjusted in their new profit sharing ratio of 3:2:1 based on Chandra's capital. So for 1/6 share, Chandra is bringing how much? He is bringing 26,000 as capital. So what is the full capital? Total capital of the firm means what we have to do? Just change the denominator and numerator. 1 by 6, make it as 6 by 1. 6 by 1 into Chandra's capital, that is 26,000. You will get the total capital of the firm. Remember. Then distribute that capital among all the partners in their new profit sharing ratio. For 1 by 6 share, Chandra is bringing how much? 26,000. For 6 by 1, how much? You will get the total capital of the firm. Prepare a small working note here. Working note, calculation of total capital of the firm. Calculation of total capital of the firm. For 1/6 share, Chandra is bringing for 1/6 share, 1 by 6 share, Chandra is bringing rupees 26,000. Rupees 26,000. Therefore, total capital is equal to 6 by 1 into 26,000 is equal to rupees how much? Calculate. 6 by 1 into 26,000 means 1,56,000 rupees. 1,56,000. This is the total capital of the firm. Therefore, we have to calculate now as per their new profit sharing ratio, how much capital must be there in the capital accounts of each partner. This is the total capital of the firm. Share it among the partners in their new ratio. That is what you have to do. Now, therefore, capital of Surendra, not Surendra, it is Mahendra. First partner is Mahendra. Capital of Mahendra in new firm is equal to how much? 1,56,000. 1,56,000 into new ratio how much? 3:2:1, right? So 3:2:1 means 3 by 6. 3 by 6. 3 by 6 is equal to rupees. It comes to 78,000. 78,000. Then capital of, therefore, capital of Surendra in new firm is equal to, capital of Surendra in new firm is equal to how much? 1,56,000 into 1,56,000 into 2 by 6. 2 by 6 is equal to rupees how much? That is 52,000. 52,000. 52,000. And therefore, capital of Chandra in new firm is equal to 1,56,000 into 1 by 6 is equal to rupees 26,000. Rupees 26,000. This is how you have to arrive at the capital balances of each partner in the firm, new firm. Now, let us prepare capital. What you have to do is, you have to take this as the final capital balance, to balance carried down. To balance carried down. Then, find out the difference and write to bank or by bank. By bank means deficit brought in, to bank means excess paid. That's all. Because in the problem it is very clearly stated, their capital balances should be maintained like this. On the basis of Chandra's capital balances should be maintained. That means the partner should have that much balance in the new firm. If the capital balance is lesser, then the partner has to bring in. If the capital balance is more than that, then pay the excess amount to the partner. That is what the instruction is. This is called adjustment of capitals, remember. Now, let us move on to the last part. Let us close this. So, to balance, we will write this balance first. To balance carried down. This is not balancing figure, remember. This is not balancing figure here. In other cases, you used to write balancing figure, final balance, but this is not balancing figure. This is note number 1. Assign note number 1 to this and write here note number 1. Note number 1 and write that amount 78,000, 78,000, 52,000 and 26,000. 26,000. Now balance it. Now balance it. Credit side total. Take the total of credit side. Leave one line gap here. Maybe if there is a shortage, then entry will come here. If there is a shortage in any partner's capital account, entry will come. So leave one line gap. Here also one line gap. Then balance the account. New partner's capital, no problem at all. Straight away write it. 26,000, 26,000. There is no difference. Total is 26,000 on either side, right? Then refer Surendra's capital. Which side is greater? Here it is 47. It is 55,500, right? So write this total first. See which side is greater. Write that total. Write the same total on the other side. 55,500. Now find out the difference. 47. Total is 47 here. So make it equal to 55,500. That is how much? What the difference? Yes, 8,500. 8,500. Right here by bank. Meaning is there is no sufficient balance in that is Surendra's capital account. If you see the balance 47,000 on the credit side and there is a debit entry 3,500, ultimate balance will be less than the balance that should have been maintained. What should be the balance in new firm? 52,000, but it is less than that. So the differential amount of rupees 8,500 he has to bring in and he has to maintain his capital to that level. That is what the meaning is. So by bank deficit brought in, right here within bracket deficit brought in. That is what you have to do. Here no difference. Then refer Mahendra's account. Here 78 plus 3, 81,500. Here 87,000. Credit side is greater, right? That means there is sufficient balance. Excess balance is there. So right here, write the total of higher side first. 87,000 on the credit side. Write the same total on the other side. 87,500. Find out the difference now. How much it is? 5,500. 5,500. That means in Mahendra's account there is an excess balance of rupees 5,500. Otherwise it would have been 83,500 balance. But actually how much we need in new firm? We need Mahendra to maintain only 78,000. So what about the difference? Pay amount to Mahendra, right? So that is to bank account. To bank account, excess amount paid. Excess amount paid. Balancing figure. This is also deficit brought in, balancing figure. So here difference is that is excess or deficit brought in or paid or brought in, right? Now how much should you should write by balance brought down here? By balance brought down, new capitals, very simple. To balance carried down, bring it down, that's all. Very simple. That is 78,000, then 52,000 and 26,000. I think it is clear now, right? Yes. Now, moving on to the last part, that is balance sheet. Let us draft the balance sheet. Balance sheet of Mahendra, Surendra and Chandra. I am writing in short form. Don't write in short form. Write full name of the partners as on what should be the date? 1st April 2017, right? 1st April. So April 1st, 2017. After Chandra's admission. That's all. Draw the columns. Liabilities, amount in rupees. Assets, amount in rupees. Yes. Let me move on to the asset side. Cash at bank. Don't write debit credit here. It is a statement, it is a balance sheet. It is not an account at all. Cash at bank. Write here within bracket. Opening balance, how much? Opening balance was, refer old balance sheet, 14,000, right? Yes, it is. Add, brought in by new partner, 26,000, add 26,000. Then, are there any other bank movements? Yes, there are. Here, amount brought in by Surendra, shortage, deficit brought in, should be added. That is cash inflow, right? Bank inflow it is. And minus 5,500 paid to Mahendra. So there is movement of bank balances, right? So add here, that is deficit brought in by Surendra. How much? 8,500 minus excess amount paid to Mahendra. How much it is? 5,500. That's all. No other movement in bank. So write the final balance, that is 43,000. Then stock, there is no change. Write it as it is. Stock 39,000. Then debtors, there is a change. 32,000 gross debtors minus PDD at the rate of 10%. PDD at the rate of 10%. They told us to maintain PDD at 10% on debtors. So minus 3,200, it will be 28,800. 28,800. Write the amount. Then comes motor car, movable one, right? Motor car, inner column, there is a depreciation. So 8,000 minus depreciation at the rate of 10%. Is it 10% or 20%? 20%, yes. So 1,600. Deduct it. Write the amount, 6,400. 6,400. Then machinery. How much? 36,000. 36,000 minus depreciation. Amount is given straight away, right? 3,800 they gave. So deduct it, 3,800. Remaining amount is 32,200. 32,200. Then what else? Land and buildings, right? Land and buildings. Yes, land and buildings. Speaking about machinery, 36,000. Depreciation should be charged 3,800. Given in the problem, no need to calculate. Straight away deduct and write the figure 32,200, right? Then land and buildings. Write it, land and buildings. I think there is a change. Is there any change? Yes. No, there is no change. So write the figure as it is, 40,000. No depreciation or appreciation. Then are there any other assets? We are following third method of treatment of goodwill, right? So goodwill will appear in the balance sheet. Goodwill will appear in the balance sheet. How much is the value of goodwill? 14,000. So write goodwill. Goodwill 14,000. Then one more item is left. Refer your revaluation account. On the credit side we have entered one amount, right? That is prepaid rent is an asset. Why it is an asset? Because if the rent wouldn't have been paid, then your cash balance could have been more, isn't it? So you have to treat it as asset. So prepaid rent, prepaid rent, prepaid rent. How much? 600 rupees. Enter it. That's all. Then let us move on to the liability side. Creditors. 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 Yes. How much? 40,000. There is no change. Write it as it is. 40,000. Bank loan. Bank loan. How much? 8,000. 8,000. Then final capital balances. Mahindra. Capitals. Capitals. Under that Mahindra. Surendra. And Chandra. Chandra. That is, write the amount. 78,000, 52,000, that is their new balances. We have already calculated. Refer here, working note. 78,000, 52,000 and 26,000, right? How much that total capital should be? The total, how much it is? 1,56,000. 1,56,000. Now, write the total of balance sheet. It must agree. How much it should be? 2,04,000. 2,04,000. 2,04,000 on either side. That's all. This is how you have to solve a problem on adjustment of capitals. So they may ask you problem on adjustment of capitals with goodwill treatment under any method. First, second, third or fourth. Makes no difference for, it will not make any difference for us. We will treat the goodwill normally. After making all the entries, then we have to calculate the total capital that should be there in their capital accounts and write it to balance, carry it down, write that amount, then balance it, write by cash or to cash or by bank or to cash or to bank as the case may be. By bank or by cash means deficit brought in, to bank or to cash means excess paid. Done. No confusion at all. Base is new partner share and his capital. That is the base. Yes. Write your assignment. Yes. Solve problem number 17. Page number 45. Page number 45, problem number 17, and submit on time. Thank you for watching this video. Thank you.